One of the most beautiful things about property, and the fact that I like it so much, is just taking something and making it better as a human feels incredible. And whether that's helping some person or doing meaningful work, or it's finding a property that's run down that a tenant's in and cleaning it up and getting a new tenant super excited about this beautiful place that they're living in. Yeah. That's also getting you a better rent return, that's making sense financially, that is well timed and ticks the long-term boxes as well. G'day guys, welcome to episode 5 of the relaunched Pumped on Property show. Good to see you, man.
It is good to be back again. Good to be back.
I just got back from 5 days in Sydney, so the borders finally opened and Queenslanders like me were allowed back.
Oh mate, we were just talking about it off camera and sounded pretty amazing surf-wise.
Just got absolute waves, got Jervis Bay, got Bendalong, got Green Island absolutely cooking, and I feel so refreshed and just super excited. You were just saying there's waves coming this weekend as well.
Yeah, I'm so jealous because it's been so small on the coast for such a long time now, and I've just been groveling in 1/2 foot, 1 foot waves, and you're getting these pumping reef breaks. But yeah, it's looking like there's some swell on the way for this weekend, so hopefully get out there and enjoy it.
I had such a big realization down there. I think sometimes when a year like this comes through and you're working hard like we do and you've got young kids like I do, you kind of lose a bit of your identity. And I feel like I just fully remembered who I was down there. I remembered,
so good.
I don't have to try and be present. I just have to be me. I don't have to think about a lot of the things that I was caught up in my head before I went down, and catching up with old friends and dad and stuff just fully reminded me of the person I am. It was just so refreshing, and we've sort of come back and decided to just take a massively different approach to the new year, which we're super excited about as well.
Yeah, I can't wait. We've always talked about going for that sort of lifestyle-based business where we can help people but still enjoy our own personal lives as well. And when COVID happened, it was kind of survival mode in a way, even though we didn't need to one little bit, but at the same time, just because there was so much anxiety floating around the world, I think, you're kind of a product of your environment, right? And you just naturally end up being in that place. And even I was saying yesterday, I found myself being a little bit wound up a bit more frequently. So super excited, just, take a little bit of a step back and still incorporate all of those good things into my life, but, just not overwhelm myself for no stupid reason.
It's so funny, man, because this is take 2 of this. I remember having a bit of a meltdown in 2017, just getting really bad anxiety after just working my ass off for so many years and projects and young kids. And you and I decided in 2017 that in 2018 we would just get back to a simpler business, only working with a small number of clients each month. I think that year we decided to take on 10 a month and choosing absolute legends to work with. And we had this year where it was kind of just super fun. We did heaps of fun content and really worked with such a small number of people. And then 19 and 20 came up, and because they were funny years, we just sort of went absolutely crazy. We were taking on sort of some weeks or some months almost 20 people, and it's beautiful to work with so many people and help so many people, but we fully made that decision for next year to go back to working the 4 days a week, back to helping people completely and just being there, and back to working with no more than 10 people a month, which I'm just, to be honest with you, bro, so excited about. It's going to be a much small number.
Yeah, it's just going to be a lot more intimate, a lot more personal, a lot more one-on-one, give us plenty of time with every single person. And yeah, it's going to be a really good new year. But today's podcast, I'm super excited to talk about as well, because we've been pondering on this idea, which is a different sort of strategy. We talk a lot of the time about long-term strategies, about granny flats and things like that, which is incorporated in today's conversation. But what we want to talk about is this idea of how we manufacture value through our properties. And there's so many fun different ways that you can do it. It's where you get a lot more involved with the process, with your investments. And you know, I love this idea of not relying on the market and taking matters into your own hands to manufacture some of your own value.
You know, at least 80% of the people that we work with want a tenant-ready, super low maintenance property that they don't have to think about for 10 years. And I fully get that. Like if I was buying from Sydney or Melbourne in Brizzy, or when I was living in Brisbane buying in Sydney, like I fully get it. But for those of you that like to create shorter term gains through doing stuff, or for those of you that are handy, or for those of you that just like a project or are looking for something fun to do, you know, we're going to share exactly what we've done, what we're doing, and you know, what some of our clients have been up to as well. Like this space, and the reason for doing it, I suppose, like my reason that I like to do it is probably because I'm a micromanager and I like to be in control. Like I don't want to admit that, but that's my reality. I'm trying to get better at that, but you know, because of my nature, like having a bit more energy, and also liking the idea of being the one, you know, that can buy an unrenovated home, clean it up over a year or two, and create a really short-term gain, especially back in the day when I wasn't earning much money. Like when I was earning 55K, the idea of making 30 grand on a reno was
hell yeah,
the most exciting thing I could ever think of.
Yeah, no doubt about it. And getting, you know, changing the whole house itself as well, whether it is a knockdown rebuild or a cosmetic renovation, like you've got this shitbox, right? Essentially, that's what it is. It's a crap house. And you're either, you know, getting stuck in, getting involved and doing different things, painting, replacing the carpets, doing some landscaping, getting involved, and it turns it into a really beautiful, nice house. And you're like, oh, wow, this is like really cool short-term gratification.
Fully. It's like sort of my dad always said to me, he's like, when I mow the lawns on a Saturday, I just feel amazing. And it's like, it's just a bigger version of that. Because sometimes when we're all doing the type of work that a lot of our clients do, like a lot of our clients are white collar, a lot of our clients are families, and it's like there's not much chance to see like the fruit of your labor almost. There's not much of an opportunity to sort of go through that process of, you know, turning something from nothing into something really special. So there's a whole heap of ways that we do it that we're going to explain today, but the theory behind it is it's all about the numbers. So if you can buy something cheap, and we'll talk about 3 or 4 ways we do it later in the podcast, and add value, then your rent's going to go up, the quality of your tenant's going to go up. You know, if you talk to your accountant, potentially there might be some tax benefits as well. And then on top of that, and most importantly, the value of the home, if you do it the right way, in the right location at the right time, goes up, and that can help you reduce your risk position or potentially create equity to be able to do something again down the line.
Yeah, exactly. And I really like to, well, I'm going to, I haven't actually done one of these projects myself yet, but I've got 2 properties in the pipeline for it, is, you know, to really time the market well to be able to do this, because, you know, certainly when there's better opportunities and there's some pressure on the market and some capital gains, it can make it a really, really good opportunity. You know, if your property is just naturally rising in value and then you're spending money on the property to add value to it as well, it's kind of this double strategy where you're going for capital growth, then you're manufacturing your own capital growth as well. It's really interesting. So why don't we kick it off with talking about a few different ways of doing this first, and then we'll come back to talk about some of the examples. So
sure. You know, the first way that I've always done it, and the simplest way, is to buy an existing home, whether it's, you know, Queenslander looking or it's a brick and tile home. And what you're looking for is a place with good bones, you know, good roof, watertight, airtight type property, but that's just been a little bit neglected by the current tenants or the current owners. So in need of a paint, carpets, you know, if you want to go the whole hog, blinds, curtains,
fans, light fittings, open up old walls. Like there's so many things you can do with a cosmetic renovation, and it doesn't necessarily break the bank when you're just focusing on the cosmetic things as well.
You know, you might want to go a step further and you might want to go a kitchen, you might want to do a bathroom. You know, some people do other things as well, but like, you know, what it is doing is just putting the lipstick on the property really, and making it feel a little bit fresher. Yeah,
exactly. And I've personally just done this with 2 of my properties. The first one that I ever bought was not habitable when I purchased it. And we got stuck in there. We did a little bit of landscaping and tidied things up. We replaced a few things on the outside of the property, but then literally just inside, just got rid of all of the stuff and painted the walls, tidied things up, gave it a really nice clean, and completely changed the property. Like, just completely changed the property.
And what was that, 2, maybe 3 days worth of time?
Yeah, exactly. With the paint on top of that, it ended up being less than a week's worth of time, and less than $10,000 worth of my own cash. And it got me about an extra $50 a week of rental income, and probably increase the value of the property just slightly as well.
You know, what's cool about this is you can choose your own adventure when you're looking at cosmetically renovating an existing or established home. So Simon's is the perfect example of the quick, you know, this place, had they have done that, you probably would have had to have paid an extra 20 grand for the joint. And so Simon's just got in there, got it tenantable, and then obviously longer term he's got an option. Another example of it was, I think, the third property that I bought, Paringa Street on the sunny coast, and I call it the granny shack because it was a deceased estate with a granny that lived there, and it was really, really well maintained as a home. She did an incredible job, but slowly over the course of about 12 to 18 months of living there, repainted the roofs and gutters. Externally, we put in some garden beds and tidied the yard up, painted outside, rendered the brick out the front. Internally, we did a kitchen, tiles, paint. The bathroom was a hack job. Like, I put in this little vanity. I hand painted the tiles with some tile paint from Bunnings.
Nice.
But it ended up looking incredible. And so I probably spent 30 to 35 grand over the course of a year. But that enabled me to go from, you know, probably all in 350K to selling it for a bit over 400 grand. So when I got my deposit back out of that property, plus the little bit of money that I'd made, I was able to go and split that into 2 new properties and continue my journey on.
Love that so much. You know, cosmetics, really simple way to do it. And the cool thing about this as well is when you're looking in the market, a lot of people, like you're just saying, you know, 80% of our clients like the low maintenance ones. I think it's 80% of the market
at least
wants a low maintenance property. So when you've got this property that does not appeal on realestate.com, you know, it just hasn't been looked after, it's been tenanted for a long time, you know, sometimes you may not be competing with as many people because so many people just don't want to do the work themselves. So, you know, with our examples, we've ended up picking up absolute steals because not as many people are looking at the opportunity.
You know, this morning, for example, just before this podcast, we had a great conversation with Tom. Now, he is looking for a low-maintenance, tenant-ready quality property, and we've been able to find this little joint down in South Brizzy for him, which the guys basically ran out of money. Like,
it's low maintenance. Like, it's low maintenance in terms of the structural integrity of the home.
It just is missing a little bit of that flair that would mean instead of him having to pay $380 to $390 to buy it right now, he's going to pick it up for like $345, $355 today. And then all it needs is literally the guys painted inside and outside. It needs some carpet. It needs some tile paint on the bathroom floor. It needs probably some blinds, some door handles and some fans, as well as an aircon. And then maybe in the next 5 years, a little kitchen. And, you know, that might all cost him 25 grand to do, but he still bought it when you factor in what replacement value would be in the current market for an absolute steal. And when he's done that work, he's probably going to have made 15, 20 grand of equity uplift, which is so hard to do in a market like this.
So hard to do in a market like this right now. So absolutely love the opportunity. Now, the next one is sort of doing a bit more. You know, it's a bit more of a structural renovation as opposed to just a cosmetic renovation. And this is the idea of adding bedrooms, adding bathrooms, adding living areas, outdoor entertaining areas, things like this.
Yeah, so this strategy is a little bit more advanced. It's not for the faint-hearted because you do have to get involved. Your property manager's not going to pull it all together for you.
No, and it generally costs a fair chunk of change to do this structural stuff.
The easiest way I've found to do it is to find a large home with wasted space. So in a lot of the old homes in Sydney, Melbourne, Perth and Brisbane, what you'll find is a 3-bedroom home with 1 bathroom and then this ridiculously large laundry that could easily be split into a laundry/second bathroom. Another example is in a lot of the old homes built in the 80s, 90s and early 2000s, people loved pokey rooms, like living space here, study nook there, media room here. And so instead of keeping it as these rooms which no one actually uses anymore because everyone lives in their kitchen, dining, al fresco area, you can convert one of those rooms under the existing roofline into a bedroom. And, you know, that simple 3-bedroom, 1-bathroom conversion into a 4-bedroom, 2-bathroom conversion, you know, could cost anywhere between I don't know and I don't know. You know what I mean? It's how long's a piece of string. But in some suburbs, like in a 600, 700K suburb in Perth, might add 100 grand worth of equity uplift and might only cost you half of that to do it.
Oh, 100%, because you've got, you know, you're going from purchasing a 3-bed, 1-bath to adding additional bedrooms and bathrooms, which changes the whole appeal of the property into the demographics that you're going to be looking at. So I really like it. And even some of the older ones as well, where you can potentially convert the garage as well into additional living space.
Double carport or something out the front on top of that.
Yeah, exactly. I think adding that car accommodation, if you're taking away the car accommodation, is just as important.
Yeah.
Because, you know, what we're finding at the moment is those properties that have just done the dodgy job filling in the garage, it doesn't appeal to those owner occupiers at all.
It doesn't, and I don't think it appeals to the tenants either. Like, you know, I was in Sydney over the weekend and so many people are driving nice cars. I'm like, where's everyone getting all this money to buy these Ranges and Beamers and stuff everywhere? I'm like, I'm driving like a $7,000 Volkswagen and I'm doing all right. It's like, I don't want to spray the cash. I want to invest it in this market right now. But, you know, these people with these nice cars, like, car accommodation is becoming a much more important thing than it was in the past, especially with the more severe weather events in parts of northern WA, northern Queensland, NT. It's like people want to be able to hide their cars without hail smashing it up.
No doubt about it. And from an insurance perspective as well. Cool. So with those more structural renovations, just, you know, understand the implications on the back, on the wallet, on the back pocket. And, you know, make sure that you definitely go out there and get a whole bunch of different quotes and things like this as well, because you need to figure out how much it's going to cost you. Because what we find with these types of projects, especially with the structural renovations, is your budget's going to blow out. There's no doubt about it.
And you can't do that stuff on your own. Like, you need qualified builders, qualified tradespeople. You also need building certifiers, town planners. You need council consent on a lot of that stuff. So make sure you do it the right way, because I've seen so many examples in Sydney of properties we bought, plus also Brizzy, where you just don't get that opportunity. Like, you might see this carport or this deck that's absolutely gorgeous, but it hasn't been legally approved. And, you know, the flip side of that is the sales value is 50 grand below what it should be. And anyone that's doing due diligence with a good solicitor is going to pick it up and just go, well, fuck. You know what I mean?
Yeah, exactly. Due diligence is key, I guess, with all of these different strategies, no matter what you're doing. Is, you know, I don't like doing anything illegal. I want to do everything by the book, because to me, you know, this is a business, right? To me, investing is a business, and, you know, you just don't want to become unstuck in a bad situation and potentially lose it all in those bad situations.
Yeah, you know, good insurances in place, make sure everything's certified, double check the work, qualified trades with licenses, just all of those simple things that you do if you're renovating $1 million property to live in yourself.
Yeah. Now, they're sort of the good equity uplift, well, ideally an equity uplift, but that's why you need to make sure you're paying the right price for it and not overpaying, so that you actually can generate a bit of value there. But the next one is coming back to what we love, which is more of a manufacturing cash flow strategy instead of an equity strategy, by building a granny flat out the backyard and renting out either the house and granny flat together or the house and granny flat separately if you can.
You know, everyone knows a huge fan of dual income properties, mainly because I've never seen someone go broke with too much cash flow. And it massively reduces your risk. Like, if you think about it, you could go out there and buy a 300K home that rents for $300 a week.
Yep.
And then you could go out and buy a second 300 grand home that rents for another 300 to get you 600 a week in rent. Alternatively, what Simon and I do is go buy the 300K home, add a granny flat for 145K or whatever it's going to cost in the council area that you live in. And then you've spent, 445 grand to get the same $600 a week in rent. Now, I'm not a mathematician, but if I can save myself 155K to get the same cash flow, that's been my preference. The other thing I love about them from a cash flow perspective is it reduces my risk, and I'm a low risk investor. So if I've got 2 incomes, if I lose one, I'm still getting 50% of my income. If I've got 4 houses and 4 granny flats, like some of our clients do, then if you lose 1 income, you've still got 7 coming in. And, you know, as Tony Robbins talks about in Unshakable and Ray Dalio in Principles, the more diversified the income stream from the more channels, the safer you are to weather events that come through in your life.
And we've got the lowest interest rates of all time right now, which is enabling people to get into the market a bit sooner, and it's a lot more affordable and your cash flow is stronger, but it's not going to last forever. Those interest rates are definitely going to come up at some point in time, and having that extra cash flow is going to make it a little bit easier for you to support the mortgage repayments when it happens.
Completely. Like, because if we look at the long term, it's been 5 to 7%. If there's other times in the cycle where banks won't let you go interest only, where you won't have an opportunity because the banks aren't taking on new business to refinance to an interest only loan. And so this is what Simon and I think. While it might be a sunny day today, you know, over the course of 20 years, there's many rainy days, which, you know, I love the cash flow strategy for. But most importantly, the reason we do cash flow is for choices, right?
Yeah, exactly.
I'm not doing it for the rainy day.
No.
Although it's nice to know that, you know, hopefully I'll be okay at that time. It's more, I want choices.
Yeah,
like, I want to
sooner.
spend time with my family, train, travel, do meaningful work less in the future if I want to.
And from that example with the 300 plus 145 as well, it's a lot less debt. It's $150,000 less debt that you need to pay off as well. So it's going to actually enable you to get to that point a lot sooner.
You know, I think about myself when I first started out in my career. I was working with IBM and making $55K a year in my grad program. I just think, how many years of after-tax income would it have taken me to pay off that $150K? It probably would have taken me 5 years, 10 years with like me being crazy.
Yeah.
I mean? And it's
then you factor in some kids and whatnot, school fees, all of that.
There's not a lot of money left over at the end of the month. And so it's like, if the property will pay itself off through the cash flow and the tax benefits, and the principal and interest, like that goes a long way over 20 years.
Hell yeah. Now, the next one that we wanted to talk about is building brand new, which is a bit of a simple one. Everybody understands building brand new, and it doesn't always end up being the case. Actually, more often than not, it's not the case where you can generate some instant equity from this, but it's certainly a value add strategy still.
Yeah, like Simon's right, 95% of the time, people don't generate any equity on building brand new unless the market's rising by 10% plus in that area that year. But every now and then, if you know where to look, you'll find a piece of land that might be a little bit below market.
Yeah.
And then if you've got a good ability to negotiate or friends, then you can generally get a build at a wholesale price and make a little bit, not just on the land purchase, but maybe on the build on the way in as well.
Yeah, I'd say this one is probably for more though, if you can generate a profit from it, it's generally for those more sophisticated investors that do have the partners and they do have that access to the off and pre-market land opportunities.
It's a dangerous one if you don't have relationships from developers or from the ability to find land off market or below market value. And if you know, no builder in the world is going to give you a wholesale price if to them you're a one-off client. Yeah. So it's just that's a tricky one, but man, there's some good coin to be made in that one at certain times of the cycle. Yeah,
but the next one is what we really like. The next one, you've done this numerous times. I'm planning on doing it as well, which is buying an existing rundown home, bulldozing it, knocking it down, starting from scratch and building a brand new home. There's so many different ways that you can do this, but I absolutely love it because sometimes, not frequently, but sometimes you can find an opportunity where you've got this really rundown house sitting on this block of land, and if the house wasn't on it, it would almost sell for more, but because the piece of shit house is on top of it, it's you might be able to buy it for basically land value. You've done this a couple of times. I've done it a couple of times as well. Crystal has done it once as well, and just love the opportunity there. But it's a very active strategy.
Super active strategy. So there's this suburb in Brizzy called Wavell Heights, and a couple of years ago you were able to buy a rundown house for about $550K to 650K. And what people have started to do in very specific streets have got these houses at good prices. They've knocked them over. They've built these beautiful modern Queensland, Hampton, like hybrid homes that are stunning. Like
beautiful homes.
700K worth of build, 800K worth of build. But, you know, they're now selling them for 1.6, 1.7 mil. And so for somebody who was very active, that had the relationships, that could finance something like that, I think some of these builders, based on buying for 500K, building for 700K, you know, making 400, 500K profit at the moment on one deal. And, you know, that's really, really unique. You know, what I find is that opportunity ebbs and flows. I've seen it in Sydney where certain times house prices spike, but crappy undervalued houses or land prices sit lower. And then there's this disconnect where there's this margin. And then as soon as some of these builds come through and they sell at that price, it pulls the bottom up and the window of knocking down and making profit closes. So you've got to be so specific. And sometimes during the project timeline, that window can close on you and shut. And, you know, all of that profit that you imagine disappears as well.
That's the case for a manufactured strategy, a manufacturing value strategy all the time. You know, you do really need market conditions in your favor to make these profits work. So, you know, we talk to a lot of people, just about every single person that I talk to that is quite new to property investing. They want to get into these short-term deals where they're doing a short-term flip or a quick subdivision and things like this. And, you know, what I always say is that these types of strategies are definitely more suited to the more sophisticated and experienced investor because of how much money it requires and how long it can take and how active you really need to get with it. You know, I don't necessarily like these opportunities for first timers or even really second timers, but, you know, once you get a little bit more established and you start to build your team and you learn how to time the market better and you understand how certain market conditions are going to impact these strategies, you know, that's when the big bucks start to come. So that's why we always like talking about sticking to the fundamentals and focusing on everything that's been tried, tested time and time and time again and consistently worked. Focus on that for your first ones. And then, you know, you're going to be investing for a long time. You've got years of investing left in you. Then you move on to these types of strategies that require a little bit more effort, a little bit more money to help pay off the debt on some of the older ones.
For sure. Like if I think about the things that I've done on the properties that I've sold, started with a really basic cosmetic reno, then another one, then started to get into building on vacant pieces of land, and then went from doing 3 or 4 of them into a subdivision, realizing the subdivisions is a lot of pain for not a lot of gain in my instance. I know people have made good money on them, but probably the wrong timing for me. And then going from that into some more builds and now some knockdown rebuilds and just some good quality existing houses with renos. But what I'm saying there is it's taken a lot of time to build up each of those skills, and you just don't learn a subdivision, a new build, a renovation all in a day. Like you learn one thing at a time from like working from a small base and slowly building the skills through. Like for me personally, I've decided to have, moving forward in the future, a really simple, basic, long-term strategy. I'm not interested in the flipping. I know that there's good money to be made in it, and maybe one day that will be something I look at. But for right now, while things are still cheap in Brizzy, it's been about accumulating good quality assets at good prices, doing the tiniest tidy up, getting the secondary dwelling set up for me, and just, you know, chilling out on them long term. And like that's what we're so excited about for you guys. Regardless of where you're at, there are different ideas, and you know, take these ones with a grain of salt too. Yeah,
exactly. And just don't think that it's all just about going out there and buying a property. Like you need to think about all the different opportunities out there. And I like to kind of incorporate some sort of passion or getting involved throughout the journey as well. Yeah. You know, if one of the partners, you know, in a relationship, you know, is a tradie or something like that, then hell yeah, use your skill sets to do this. Or, you know, if somebody's a site manager or works in design for a building company, then hell yeah, you're going to have the hookups, and like incorporate this into your journey to, you know, fuel that passion and keep you motivated and keep you moving forward.
You know, that's the big thing about manufacturing value. A lot of the stuff I've done for passion and fun. And it's had some sort of financial impact, probably not as much as I would have. Like, I don't know if I would have done as much of it now, knowing what I know about some of the things I've done, but you live and you learn. Like, to me, one of the most beautiful things about property, and the fact that I like it so much, is just taking something and making it better as a human feels incredible. And whether that's helping some person or doing meaningful work, or it's finding a property that's run down that a tenant's in and cleaning it up and getting a new tenant super excited about this beautiful place that they're living in. Yeah. That's also getting you a better rent return, that's making sense financially, that is well timed and ticks the long-term boxes as well. Yeah, hell yeah. Like, you know, that just triggered one of the projects that you're doing at the moment, where you've got like sort of the unrenovated house, but you're building your brand new granny flat in the backyard. And weren't you saying that your tenant's thinking of moving out of the rundown house into a brand new option, like more affordable and brand new opportunity? Like, it's just cool that you get to do that and provide affordable quality housing options for people that aren't in a position to do it themselves yet. You know, this guy, he's such a nice man, and he's been in the house paying like $350 or $370 a week. It's a fully rundown Queenslander. He's going to move into the back granny flat and he's going to pay $320 a week or something for it. He's stoked because he wanted to downsize anyway. It's on the same block. He's got all of his neighbours that he knows. It was funny because when I put up the fence, his neighbour was like really upset because she's like, I won't be able to speak to him through the fence anymore. It's one of those like old wire fences. And then he'll move out, which will give me the opportunity to spend 25, 30 grand cleaning up the established home, and then by doing that I'll be able to move the rent on that one up to $470, which he never would have been able to afford. So it's not just about making money in return and running it like a business. It's really nice if you can add that human touch to it as well. Yeah, no doubt about it. And you know, we're very passionate about manufacturing value. I to date haven't bought a property that doesn't require some work, and I'm so happy about that. Same for yourself. You know, just about every single one of your properties has required some, like, it's an active strategy, and it's what we love doing. And you know, think about all of these different options. Obviously there's so many other ways to manufacture value through property, but this is just how we do it and the ways that we like it, because you know, to me, these are the lower risk opportunities, and it doesn't cost you as much money, and there is still amazing profits to be made at the right time. Without a doubt. So we really appreciate you being on this journey with us. Excited to continue on in the New Year's. Definitely. And thanks so much for today. Yeah, appreciate it. If you can, guys, give us a 5-star review, leave us a comment, let us know what your thoughts are, or what you're doing personally. But yeah, until next time, guys. Woo! That's a wrap. That's a wrap. Have a spin. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.